Good day everyone, I am Justine L. Pornales. Together with my groupmates, we will discuss to you an interesting topic and we will learn about something. Do you know what that something is? It's all about books of accounts. Books of accounts are finance records, ledgers, and journals that compose the company's accounts. To keep track of all its transactions more efficiently, company keeps and maintains a set of records called books of accounts. There are two major books of accounts, the journal and the ledger. Journal is a chronological record of all company's transactions listed by date. It is often referred to as the book of original entry because we first record the company's transactions in this book. There are two types of journal, the general journal and the special journal.
General journal is the most basic type of journal wherein all the business transactions are recorded in chronological order. This is an example of a general journal. This indicates the journal page. As you can see, there are 5 columns in a general journal. The first column is for the date column, for the date of the transaction. The second is for the account title and explanation. The third is for the reference, which is based from the chart of account. The next is the debit amount, and the last is the credit amount.
Next is the special journal. There are businesses that may encounter similar or recurring type of transaction. So to make it easy, they will record it to the special journal. What is a special journal? Special journal are used to record similar or recurring type of transactions. There are 4 types of special journal. The sales journal, cash receipts journal, the purchases journal, and the cash disbursement journal. First type of special journal is the sales journal. Sales journal is used in journalizing all sales of merchandise on account. This is an example of a sales journal. This indicates the sales journal number. In the first column is the date, wherein the date of the transaction, then the customer, the charge invoice or the sales invoice number. The charge invoice is the source document issued by the business to the customer. Then reference. This reference is left blank until the journal entries are transferred to the ledger. Then the accounts receivable or the debit and the sales or the credit. Then total and double rule. The next type of special journal is the cash receipts journal. Cash receipts journal are used in journalizing all cash received. This is an example of a cash receipts journal. The CR1 indicates the cash receipts journal number. On the first column, there's the date or the date of the transaction, then the account credited or the customer, the reference, then the cash column, the accounts receivable column, the sales, and the sundry. The sundry are the miscellaneous or less regular items. Then the cash total, also in accounts receivable, sales, and sundry, then double rule. Another type of special journal is the purchases journal. Purchases journal are used in journalizing all purchase of merchandise on account. This is an example of a purchases journal. Just like the other journal, this P1 indicates the purchases journal number. Then in the first column, date, then description or the supplier's name, then the terms, the charge invoice number or sales invoice number, then the reference or based on the chart of account, then the last column, the debit or the merchandise inventory, and the credit, the accounts payable, then total, and then double rule. The last type of special journal is the cash disbursement journal. Cash disbursement journal are used in journalizing all cash paid. This is an example of a cash disbursement journal. This CD1 indicates the cash disbursement journal number. Then in the first column, the date, then description, the supplier's name, then reference, then the check or the voucher number. The voucher is the source document. Then accounts payable column, the salaries, the supplies, sundry, and cash. Then in every accounts payable total, also in the salaries, supplies, sundry, cash, and then double rule in every total.
Next major books of account is the ledger. Ledger refers to the accounting book in which the accounts and their related amounts as recorded in the journal are posted periodically. This is also called as the book of the final entry because all the balances in the ledger are used in the preparation of the financial statements. This is also referred to as the T account because the basic form of the ledger is like the letter T.
General ledger are usually grouped according to the chart of accounts and arranged according to the order on how they appear on the financial statement, starting from the asset accounts, followed by the liabilities accounts and equity accounts, including the revenue and expenses.
Here's the example of the general ledger. The upper left portion indicates the account titles and the upper right portion indicates the code number based on the chart of accounts. The first column is the date and the second column is the explanation or the item, represent the source journal and the nature of the transaction. The third column is the reference, identify the page number of the journal where the transaction takes from, and the fourth and fifth column is the debit and credit column, used to record the amount of transaction from the journal. And the last column is the balance. At the end of the month, the remaining balance should be considered.
The second type of ledger is a subsidiary ledger. It is a group of accounts with similar characteristics. It is an additional record to general ledger to track the per individual account balance of companies, customer, and creditors. There are two types of subsidiary ledger, the accounts receivable ledger and the accounts payable ledger. Accounts receivable ledger is used to track the individual account balance of company's customer. The account payable ledger is used to track the account payable balance of company's creditors. This is an example of subsidiary ledger, accounts payable subsidiary ledger. This part indicates the vendor or supplier. Below it, the address of the vendor or supplier. And in this part is the vendor number. In the first column, indicates the date, the item, then the next column is the reference, the debit and the credit column, and the balance.
Books of account is very important, especially to us as future accountants and businessmen. We can gain more learnings and we can apply it to our daily lives and future jobs someday. And this ends our discussion about something, and that something is
Books of accounts!
Jump into the pool from the balcony. Everyone's swimming in a champagne sea.